Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Chris Campbell joins us. He's the chief strategist at Kroll. He joins us here in our Bloomberg Interactive Broker studio. Chris, what are you telling clients here these days? I mean, we've had this, rally here in November, and I guess it's in part due to, I guess a lot of investors are probably like me saying, boy, if I'm at peak rates, don't I take on some risks here with my portfolio?
Yeah, look, I think it's highly likely that we've probably seen the top of the rate interest rate raise. But I kind of consider myself more of a pessimistic optimist right now, which means I think we're going to go some difficult times. But on the other side of this is going to be quite significant. There's trillions of dollars out there in the park in the sidelines with the funds and families that we advise. And I think they're looking for this correction. I think that on the opposite side of the correction, there'll be just an enormous amount of money flooding the capital market, flooding the markets, and merger acquisitions, and lots of other things that are goodness will happen. I think probably late next year or early the year after.
Remember, Paul, you want to buy low.
Yes.
To sell high.
No, you just want to buy them and hold them. Baby.
You like to buy high and hold.
I just buy them. I buy the mo. Buy the momentum.
Well, I mean, you could get on the wrong side of that trade.
I've been crushed so many times trying to catch the falling knife.
That's a good point. What do you think about that?
It's probably a good idea to buy low, sell high. Typically, it's good. It's good advice.
I mean, you could have caught the falling knife with treasuries at 5%. Yes. We were like freaking out.
Yes.
In this studio, right?
That's a good point. I mean, right across the curve, we had fives everywhere.
At $72 on a barrel of oil, we were freaking out.
I'm going to buy some oil here now that I think. But I mean, Lisa Bramwitz is sitting with a big barrel of oil in her apartment in the
She got it for
negative
$-40.
Negative $40. All right, so where in the market are you looking these days here? I mean, because it seems like, do I stick with the Magnificent Seven that have worked so well? Do I try to find some of the laggards? How are you thinking about it?
I think actually you can start diversifying it. Again, if we're seeing peak rates, I do think we're going to be higher for longer. I think that the Federal Reserve is going to try to avoid becoming lowering interest rates next year. I'm a little bit of a contrarian in this regard, because I believe that there's it just becomes really political. The Federal Reserve, I think that the chairman actually has an enormous and outsized influence in the 2024 elections, because I think it's mostly it's going to be the economy, and so I could think that he'll just be very careful and very cautious about that, and so I think that we're in for a tight probably all of next year. But I think this is the time to long the market, absolutely, and diversify.
You were, by the way, a former assistant secretary for the U.S. Treasury Department. You have interacted with Jerome Powell on a wide variety of topics, but I wonder what your thoughts are on the Druckenmiller-Yellen spat. I mean, could we really have sold much longer maturities at much lower rates? Should we have done that?
I think there's, as in every argument, there's two sides of it.
Of course, and also hindsight is 20/20. I get that fully.
So, I try not to look back at my former colleagues and try to second guess what they've did. It's very difficult. Those jobs are extremely difficult, and they're very hard to you get pressure from everywhere.
All right, so let me ask you this: in terms of the Fed, for a while there was this thought that Jerome Powell would do anything not to become another Arthur Burns. That is, he wanted to really crush inflation and stop it in its tracks so that it never reared its ugly head again, or at least, during his time. Is that still the case, or is he going to start worrying about, joblessness, an economic slowdown? Is he going to start getting a little bit soft and dovish when the bad data comes out?
Yeah, I always compared him. I think you try to avoid becoming Paul Volcker. I mean, I think he just doesn't want to have any kind of stagflation. I think he's trying to avoid that at all. So I think that tight for longer, make sure you stamp it out, right? I think that there's some Fed governors are suggesting, and I think that the Fed is looking for a slowdown in job growth, and that's all of that means. I think this is where I'm a little bit pessimistic, if you will, and I think we're going to see a bit of a downside. Is that the American consumer is kind of running out of steam. I think that they're the largest economic engine of the economy, and they've spent through their savings, and now they're spending on credit cards at record rates at a very high interest.
So you're also former staff director, the Senate Finance Committee at the United States Senate. What did you do there?
The committee is in charge of all Medicare, Medicaid, Social Security, tax policy, international trade. So it oversaw 70% of U.S. spending and 100% of incoming revenue.
So is it your job to make sure that when senators are on television questioning witnesses and whenever anybody comes in front of their committee, that they sound intelligent?
That, working very closely with the members and their staff, it was trying to set an agenda that was very difficult. The difficult things about what we our mandate was that they're just all of them are extremely political. I can think that good people can have arguments about entitlements, Medicare, Medicaid, and Social Security, but the challenge is trying to actually have a public debate that actually doesn't become highly politicized and really scare Americans is really hard on those issues. And then tax policy, of course, there's always a give and take, where one side typically likes lower taxes, one side likes higher taxes, and it's just you try to find some way to get compromise. But
how much work between senators happens behind the doors? I mean, did they really walk down to the hall and say, let's debate this issue? Does that happen?
Lately, they just say, do you want to fight?
Exactly. and I guess the reason I was going to, because I just, we look at these committee hearings, whether it's technology people coming in front of them or whatever, and our senators and our congressmen, they just sound so uninformed. It's really painful / embarrassing. But I'm just wondering, do they debate the issues amongst themselves?
They do, and staff does a lot of that work for them as well. But I think it's it's very difficult, as they're also pulled everywhere. But the challenge is, and I don't want to get anyone in trouble, because right now in American politics, if you're a Republican talking to a Democrat Republican talking to a Republican, your voters don't like you. But I will say that there's an enormous amount of that happening behind closed doors, and it has to, because honestly, genuinely, nothing would get done. And I'll tell you, nothing's getting done now.
The staff people we talk to are always so bright, so well educated. They know the issues. And then when you see these men and women on TV, they're just the worst.
They have to be.
But what happened?
To get elected by the American people.
Exactly. What happened? Don't the staff spoon feed them what to say, what questions to ask? How do they come across so badly?
I'll say that I think that the Congress reflects the mood of the American people at that time. Right?
Yeah, so, I guess that's
right.
it.
So I think that's I think that the American people get the House representatives they want and the Senate they want at the time, and of course we have a little bit of a longer fuse on the presidency, right? So, but I think it's going to be interesting to see how this next election happens. I think there's there's a lot of variables at play, and there's significant issues.
Do you opine on potential election outcomes for your clients?
Everyone wants to know, right? And 'cause it matters. I mean,
right.
The policy under a Republican or Democratic administration is going to change, and of course then it matters if it's Trump or Haley or someone else in the Republican side, and or if it's Biden or another Democrat on the Democratic side. And so, yeah, absolutely. I think that there's significant issues, but I believe though that if the economy is such a central component of the election in 2024, and we are in a downturn, likely it's a bad time to be an incumbent in D.C. at that time, and so right. I'd likely see a wholesale change. I think the House may go Democrat, the House Senate may go Republican, and we perhaps may see a Republican.
Having gone to the Thunderbird School of Global Management, do you have any advice for Duke on how to play basketball?
I have friends everywhere, so I'm just going to sit on my hands on that.
Yeah, exactly. Smart. He'll talk politics, but he won't talk.
I wonder, ASU more fun or UCSB?
Oh gosh, that's a really good question.
Santa Barbara, unbelievable.
Well, that's where I went to undergrad, and I think
awesome.
it's you're not very far from the beach anywhere on that campus. So it's.
All right, Chris. Thanks so much for joining us, Chris Campbell. He's a chief strategist at Kroll, talks about this market and politics.
You're listening to The Tape Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
We're joined by Norma Chu. She is the CEO of DayDayCook. The New York Stock Exchange symbol is D as in David, DC. Went public today, sold 3.9 million shares at $8.50 a share. The stock's trading right around $6 right now. Norma, thanks so much for joining us on a busy day for you guys. Can you tell our audience kind of what DayDayCook is? What do you guys do over there?
Sure. Hi. Thanks for having me today. I started the business about 12 years ago, and the whole concept was really to create a platform and brand that can encourage the younger generation to enjoy cooking at home. And right now, we are a food innovator, and we own a portfolio of brands. And all of our brands basically provide ready-to-cook and ready-to-heat product solutions. We also do a lot of social media marketing, building brands and promoting products, and also engaging with our customers.
All right, so I have been cooking a lot this year. What do you
great.
have for me? What are the products? Give us some examples.
Sure. Since even though I started the business out of Hong Kong a long time ago, last year we started looking into the U.S. market. This year we just completed our very first acquisition of a brand called Nona Lim. So Nona Lim, you can find her products right now in Whole Foods, Kroger, Target, and also a wide selection of online e-commerce platform. You can probably try some of our noodle starter kits and also a variety of bone broths. Coming up next, we do have a shelf-stable, clean label cup noodle coming to the market. So hopefully you enjoy those as well.
So talk to us about how your business, I guess, was impacted during the pandemic, because I would think everybody was cooking at home and there was a lot of demand for, easier ways to cook at home. How did that impact your business?
Yeah, that is so true. I started about 10 years ago, and at that time, I think a lot of people still wonder, will the younger generation enjoy cooking at home? But since the past few years, I think there are a lot of different trends that we're seeing, which is really driving the growth for our market. The first one is really structural change in consumer behavior. I think a lot of younger consumers now do want to cook at home, but they want a convenient, delicious meal with minimal effort. Second thing, I think is really the whole work at home social trend. So in general, a lot of families are cooking probably 6, 7, or 8 more meals at home now, and that's also really helping our space and really driving the growth that we're seeing.
How have you dealt with food inflation? Are your input costs continuing to rise, or have you seen a turnaround?
Well, the good thing is, we are an asset-light model, so we work with a number of, manufacturers and experienced partners. So that gives us a little bit of flexibility in terms of, sourcing and manufacturing. And the beauty is, this year and looking ahead, we do have a very aggressive plan in terms of growing internationally. And the nice thing is, in markets like the U.S., Europe, and other parts of the world, we are seeing such strong demand for our product, which really enable us to price our products with healthier margin. So that's also having a positive impact on our business.
So geographically, where do you do business these days, and what's kind of your future look like?
Yeah, so I started in Hong Kong in 2012, and then we expanded into mainland China market. Last year, we started looking into the US, and this year with the very first acquisition that we just completed. So we are targeting about 10 to 15% of revenue coming out of the US market this year. And looking ahead, we're targeting 30% in 3 years' time, 50% in 5 years' time of international sales.
So I'm just looking at your stock again, $6 a share. It went public this morning at $8.50. Any idea what's kind of pushing the stock down here? Have you heard from your bankers or anything?
Well, I used to be a stock research analyst.
There you go.
Yeah. So I typically don't get too hung up on the day-to-day, performance of the stock. I'm more a fundamental research analyst. So I would believe in focusing on our business plan, continue to execute, and the stock will just perform on its own.
And the proceeds, I guess, are for acquisitions. That's how you plan to expand?
That's right. A big portion of it is continue to drive business growth. And within our growth strategy, really is looking at M&A transactions, M&A opportunities to help us establish a more international footprint and also continue to grow our multi-brand product portfolio.
So, you talk about the younger folks. I actually agree. When I was younger, coming out of college, I never cooked. But the kids today, maybe it's just because of the pandemic, I mean, they're cooking and they're going all in. I mean,
Yes, that is
major
very true.
ingredients. I mean, it's just. I mean, is that kind of the market you're looking at?
Yeah, I mean, it's just so exciting that now I think the younger generation do feel cooking with a lot of passion, and it just makes me so happy to see that because I mean, cooking has always been a passion for me. But when I look at this space, I think there's a lot of opportunity in terms of creating clean label products, and that's also one of the criteria that we look for when we look at more growth opportunity. Because I think traditionally some consumer might think that Asian food products may be a little bit more processed, maybe a little bit more heavy on the sodium. But if you look at the brand that we just recently acquired, which is Nona Lim, once again available at Whole Foods, Target, and Kroger, all of the products are clean label. So we really care about the type of ingredients that we use, into our manufacturing process.
All right, thanks very much for joining us, Norma Chu. She's the CEO of DayDayCook. Symbol DDC is a ticker symbol. They just went public today. Going to be ringing the closing bell at the New York Stock Exchange later today, so that's exciting for any new company. We appreciate getting a few minutes of your time.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Kevin Tynan joins us. He's a senior autos analyst with Bloomberg Intelligence, so he can join in on this conversation. So, Matt, what are you driving?
So, first of all, I told you before, I'm driving an affordable SUV.
Okay.
That seems to be fairly solidly built. It's very green, and it's got great tech, and the brand is Ascendant. Ascendant. It's a brand that I think, this is why I wanted Kevin to join us, because I don't actually know how well they do, but I see more and more of them on the road, and I know that they have a really cool new logo.
Yep, like that.
And I'm talking about a Kia, obviously.
So
Love
this
the
is
new
a Kia
logo.
Sorrento?
It's been, a couple of years since they made that new logo, and I feel like it allows a whole new customer to buy into the story, because it just is a way to break.
Is it Korean?
To break from the past. Yeah.
Okay.
When they first came out, Kias and Hyundais, you thought, okay, this is great, a $20,000 Econo box I can drive for a few years till it breaks. But now I think it's a very different story. Kevin, let me bring you in here and get your take on, the quality of these vehicles, the abilities of these vehicles, and, for example, the Telluride, the Kia Telluride. I feel like that could be cross-shopped with a Range Rover, and it costs like a third the price. So what do you think about Kia?
Yeah, that is an interesting story because it's, the two brands, Hyundai and Kia, have moved from the entry and move-up market to higher price points and intensified their truck versus car mix. They were 43% truck as recent as 2018. Now they're 70%. So just think about what that's done for their average transaction price, their margin, profit and revenue contribution has been significantly stronger than it was when it was known as a Econobox brand. And what they did, that transition was really motivated and helped and advanced by the idea of the 10-year, 100,000-mile drivetrain warranty, right? So they had a
wow. 10 years and 100,000 miles?
On the drivetrain.
Usually
right?
it's like 3 years and on the drivetrain. So a lot of times those will be 5 years and 60,000 or something.
Right.
Yeah.
Right. So basically it gave people protection that said, if you have concerns about quality, here's how we're going to deal with that, and it's the best warranty in the industry. And then as they've moved up market, which if you think even about Tesla, right? Tesla comes in at the highest price points and then tries to move down. And every automaker tried to do that to gain scale and volume. Think about Mercedes moving down market and BMW moving down market. Hyundai Kia did it the opposite, right? They started at the bottom of the market, won loyal customers at the entry and move up level. That warranty was a big part of it, proved their quality had improved. And now there's even the Genesis brand, which is legitimately competing at the higher end of the market with the Land Rovers. But
Genesis is so Honda has Acura, and Toyota has Infiniti,
Lexus.
or no, Nissan has Infiniti, Toyota has Lexus, and Genesis is like Hyundai's version of that.
Yeah, because what happened was, there was a period where Hyundai Kia came out with full-size sedans to compete with 7 Series BMW or S-Class Mercedes, and people kind of laughed it off like there's no way I'm spending $75,000, $80,000 for a K900 Kia or a Hyundai Equus.
They wouldn't even do it for a Volkswagen Phaeton.
Right, so they created this new brand and put all the high-end stuff in there, and it's actually worked pretty well. My wife will, believe it or not, and she's a kind of strange, not car person, but will
Hopefully
only,
your wife's not listening.
only buy Hyundai. She will only drive Hyundai.
Really?
Yep, only
That's
drive Hyundai.
interesting. So she must be very happy about the progress they've made.
You mentioned Telluride, so she has a Palisade calligraphy, and it's almost like you can load that thing up with every piece of technology and the warranty and the whole thing, and you're still at a very, very reasonable price point.
And they look awesome. I mean, you must have seen the Kia Tellurides.
Oh, yeah.
Such cool-looking vehicles. Now, the Sorrento doesn't look quite as cool, but it's got great features. For example, since it's a hybrid, there's a physical button you can press to switch from full EV to hybrid EV. Or when you're turning left, and you can't, obviously there's a blind spot, but a screen in your dashboard shows you what's in your blind spot. Same when you're obviously turning right. And it's got a center locking diff. Like, it's got torque vectoring.
A what?
You can lock the center diff.
What's the diff?
Differential.
What's a differential?
In case you're, so that the wheels can move at different speeds, but if you're stuck in a place, you can make them all move at the same speed so that you can get better traction. It's got torque vectoring all-wheel drive, which is, I first heard about torque vectoring when I was a kid, I think reading Road and Track about a Porsche. So it's pretty impressive that Kia has this technology. I mean, they've really...
What's the price point, Matt?
I think it's $50,000 for the loaded up one, for the top trim.
And if you think 48,000 is average in the industry these days, so right there, and that's the point, is that bang for the buck, you're getting all the technology.
Now
right,
they don't. Correct me if I'm wrong, Kevin, but they don't get a tax credit on the green vehicles like a Ford or a GM. Would, right? Because they're not a union shop, not made in the U.S., all of them. So
correct.
What's the story?
The rules of origin of the components and things like that. I don't have the, believe it or not, list memorized off the top of my head, but I believe that would be correct.
I pretty much do. So,
so Kevin, are the Korean and Japanese automakers, are they as committed to EVs as, I don't know, some of the others? I mean, it just seems. Give us a sense of where those guys are.
Yeah, they've been slower. Look, Hyundai Kia have EV5, EV6, Ioniq 5. So they sort of rushed into the segment a little bit. But what's interesting
with some winners, I mean, the Ioniq 5 looks cool. The EV6 is fast. I made my buddy Mark White throw up by accelerating so quickly in that thing. To know.
But the thing with that is that what's interesting is that when you look at average transaction price across the brands, it's in the high 30s, right? So below the industry average. But then when you look at their EVs, they're above $50,000. So it's a way for them to sort of move up market. I don't think they're contented the way, say, a $50,000+ Telluride or Palisade would be. But people are willing to buy, or at least they were until very recently, willing to pay up for the electric versions of some of the Hyundai Kia stuff. We'll have to see how sustainable that demand is going forward. But it's very interesting that, that's an automaker that's known for, and that's a risk for the GM and Fords of the world as they move their average transaction price above $50,000, above the industry average. You're really squeezing out the entry and move up buyer, and you're saying like, hey, look, if you're not really ready to spend, we don't have product for you. And that's where the Asia-based manufacturers, Hyundai, Kia, Toyota, Honda, sort of move down market, and they say, well, we're willing to take you, even if it means losing money on those entry-level vehicles, because we believe that we'll give you a good enough ownership experience that you'll stay with us up through the portfolio until you are ready to spend some money, maybe in the Lexus brand or Infiniti or Acura.
I mean, the Ford F-150, the most popular vehicle out there on the American roads, I mean, what is that list for? And can the average person afford?
You can get in on one for 30.
You can get into a Ford F-150 for 30.
Yeah. But that's the lowest trim level,
Because I drove the E1 at $94,000.
Yeah, it was $100,000. My question is this: you can get the Sorrento you can get into a BMW X3 for a comparable price, but I've seen people put BMWs up on lifts, and they're like over-engineered. They're so focused on stiffness and the driving experience. And I guess that has to do, like, in order to achieve that, you need the longevity, you need the experience in production, right? Kia and Hyundai, they're just not there yet.
Yeah, I think there's a, as a buyer, you would think about, do I want to buy, the lower end models of a premium brand, or do I want to buy the completely loaded version of a volume brand? And that's kind of the debate, right? So a decontented X3 versus a loaded Sorrento, or, and people will have different opinions on that, but you feel like even the ownership experience or dealing with the dealerships when you are, the big cheese when you roll it into, into the dealership or into the service bay, is like, hey, this is the owner that spent up for everything, as opposed to being at the bottom of the portfolio with a low content vehicle.
Matt's in there with the Kia Sorrento. I got the BMW X3.
You got the loaded X3, I'm guessing.
Loaded X3. And Kevin, next time I'm down in Princeton, I'll show you the X3. It's good stuff. I'm very happy with it. That's Kevin Tynan. He covers all the autos for Bloomberg Intelligence, a real gearhead.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We have Dana Telsey in studio. She's got her own firm, Dana Telsey. She kind of runs that. And I'll tell you what, not only is she one of the best analysts covering retail on Wall Street, and that's been proven by all the polls and magazines over the years, but what I admire most is she's left a big Wall Street bank, set up her own shop when that was pretty rare at the time, as I remember. And that's number one. It was rare. And number two, she's been successful at it. Even more rare, because I've seen a lot of folks that are highly ranked leave the big seat, go set up a shop, and it just doesn't work. But she makes it work.
Enough with the flattery.
It's good stuff, man.
By the way, Dana, I heard a stocks reporter on the other side of the office call you a genius today.
Oh, thank you. Thank you very much.
So
interesting.
Yeah.
There you go.
So I don't think you can top that.
So Dana,
why? Let's first ask the question, because this is the first earnings season I've really noticed how many of the retailers are at the back end of the earnings calendar. And is there a reason for that? Is that just traditional?
It's tradition. I mean, typically retailers are on a January fiscal year end. And the reason why is because December is typically one of their busiest months. So you need the month after January in order to put everything together. Plus, you got to get rid of the returns in January, so you really know what your inventory looks like at the end of January going into the following fiscal year.
And you just thought they were lazy. I don't know.
They're not lazy.
So, all right, Dana, so we've kind of getting through the meat of this most recent quarterly earnings period. What were your takeaways from the quarter itself, and more importantly, looking forward a little bit?
I think the big picture takeaway overall is that we have a very discerning consumer, that we have a consumer who's moderated their spend at almost all income levels. And what we're seeing is that retailers, the execution has improved. Everyone's inventory levels are clean. They're cleaner than what they were. At the same time, we're going to have a more promotional holiday season this year as compared to last. And when you look at the cadence so far, October sales growth was slower than September, by around 100 basis points or so. And going into November, it's remaining the same as October. Consumers are waiting for big events. And we know that a lot of the discounting, because it's more promotional this year than last year, even though still less than 2019. But what we do know is they wait for the events. We had Prime Day in October.
Yep.
Black Friday isn't going to be what it used to be. And with Christmas falling on a Monday, the procrastinators can wait until Saturday and Sunday.
John Tucker. There you go. We're just looking at you.
So more promotional this year than last year? I keep seeing in earnings releases that they're controlling inventory well, or, if sales fall, at least they're managing their inventory. Why are they going to be discounting?
Couple things. You need to discount in order to drive the consumer to get them to convert. Last year you had too much inventory in many instances given the supply chain issues that you had. And right now, some of the price increases from inflation, they're undergoing a little bit of a rollback. But the focus on experiences versus goods, we all know what Taylor Swift did during the summer in terms of boosting spend when she was here in the U.S. You have to give the consumers not only the what to buy, but the how to buy. And one of the things we're seeing, the retail experience, it's a social experience too. So watch the physical stores. They're not going away.
That's kind of where I wanted to go, because I had a hard time getting to my subway last night, because out in front of Bloomingdale's, they had a big stage set up right in the middle of Lexington Avenue. And I think there's some Broadway show, the cast was going to come and sing a song. So that's an event,
Holiday
right?
windows. There was the holiday windows.
Okay, there you go. Thank you. I did make it to the subway. So talk to us about the retail store, because there was a narrative that I bought into that e-commerce is going to replace everything, no more stores, thing of the past. Where are we today in that thinking?
That was pre-pandemic thinking.
Yes.
The pre-pandemic thinking of there are too many stores and Amazon's going to take over. Well, pandemic happened, and look, Amazon didn't take over everything. Too many stores, you bet, and we had a ton of closures post the pandemic, so that now many retailers' store bases, they're more productive, they're in the right locations, and they've even resized a lot of them. And the other narrative used to be, oh, there are too many retailers, they need to go bankrupt. Well, they did. We had 96 consumer companies go bankrupt right during and post-pandemic. So where you are today, fast forward, we have better stores. You look at 4 new stores that are opening in Manhattan for Black Friday. Take a look at the Wegmans that just opened on Astor Place. Take a look at Crate & Barrel that opened their first new store in Manhattan in 30 years on Broadway. Lululemon's remodeled store on 5th Avenue and 17th Street. And then you also have, it's Wegmans, it's Lulu, it's Crate & Barrel. About one more. I got to think about the other one.
What's the deal with Brooks Brothers? Because I'm sure, like me, Paul grew up going there. When I got my first suit, it was at Brooks Brothers. I remember going to store number 1 to get fitted for a formal coat when I was like 5. It was the best place to shop for men's clothes. I mean, really an experience. My grandfather got his World War II, his dress blues at Brooks Brothers. Why did they go bust, and what's happened to them?
Couple things. First, it's Target. That's the 4th new store that opened on 14th Street. Let's go to Brooks Brothers. So look at what everyone's wearing here today. Yep. Are any of the 3 of you men in a suit?
Not really. No.
Okay. What did Brooks Brothers sell a lot of?
Suits, yeah.
Okay, there you go. So you got to pivot in order to be able to reinvent yourself. Retailers can do that. We've seen retailers reinvent themselves. You look at Coach, reinvented itself. You look at Levi's, been around 150 years, reinvented itself. So the fact that if you don't reinvent yourself, it's hard to keep such an expensive piece of real estate. Now they have a coffee shop there. I meet a lot of people there. It's my destination for meetings.
Wow, that's cool. It was a sweet spot.
From Brooks Brothers down in the Shrewsbury Mall, down the shore.
I now go to Paul Stewart, which is next door.
The no iron shirts are like classics. This isn't a Brooks Brothers, but you get the picture.
I get
Love
the picture.
those.
The place was a classic place.
Well,
now, the other thing, I typically eschew the word barbell. It's like the most cliche phrase on Bloomberg television. Okay. But I've noticed that Macy's, for example, Bloomingdale's did better than all of Macy's, and Macy's has some kind of off-brand or lower cost backstage, which did much better. So it seems like the higher-end consumer is doing well, and then everyone else is going downscale. Is that the case?
Well, when you look at the uber wealthy, Hermes had double-digit sales gains, so they're certainly doing well.
George Santos apparently was shopping there with campaign funds, allegedly.
Very good.
Yeah.
And when you look at the lower end, take a look what you got this week. TJX with same-store sales up around 6%. You look at Ross Stores yesterday, their same-store sales were up around 5%. Value works, and you see many retailers talking about the fact that their outlet stores are performing. Look at Tanger Factory Outlet Centers, and you've seen newness there with their new Nashville opening that they have. So there's a little bit of a barbell, but even that luxury consumer, except for the tippy top, is moderating. Look at Burberry's results yesterday where they talked about the fact that they've seen a slowing in global luxury demand. So whether it's the macro, whether it's the stock market volatility, or if focused on experience versus goods, and certainly for the mid-tier and lower, higher interest rates and inflation are an inhibitor to opening your wallet.
Yep, absolutely. All right, Dana, thank you so much for joining us here. Dana Telsey, CEO and Chief Research Officer at the Telsey Group.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.